Fund SOFI. I marry Nvidia and I kill HIMs. Here's the ones that people are going to love, which are our biggest 12-month upside buys. AMD, I think we have the street high, 750 on AMD, the 78% implied upside. TSMC, we think is grossly undervalued, 61% upside on TSMC. Broadcom, $700 target on Broadcom, and 66% upside there. And then Micron, we have another 47% upside at 1,000. We have Nvidia at 320. We do think there's significant upside there. No, 20 is totally in play based on the revenue growth that they have, but I think it's going to take years to appreciate to that level. I'm very bullish on open source because of token costs, and I think NVIDIA's got an opportunity to really lead in that particular category. It's not unlikely. 10 trillion feels very real to me. SOFI is way undervalued now. It is such an interesting and exciting company.
Welcome to The Big Skinny with Lou Basenese, where we keep everything 111. One headline that you should probably ignore because the consensus often gets it wrong. One data chart that you should absolutely pay attention to because the data seldom lies. And one investment insight that you can hopefully use to increase your bottom line right alongside ours. Today, I am thrilled to have the man, the myth, the legend, Dan Newman from Futurum Group, Futurum Equities. He's the biggest badass on Wall Street with his research and his guns, man. What do we got? 22 inches? What? Come on, dude. You're getting more jacked every time I see you.
Peptide fueled. It's peptide fueled market stress therapy. I call it. You know, I like
peptide fueled market stress therapy. I like that. That's a good one.
You know, you've got to have a release. You know, the worst the stuff we do. It's insane. Just the daily gyrations. But I appreciate the kind words, and of course, it's great to be with you as always, Lou. It's been a crazy few days. You know, any coming out of any week where Nvidia reports earnings tends to be a busy one for us. But we got a lot going on just because, you know, I'm buying companies. We're initiating coverage on 14 semiconductor and infrastructure names. We've launched a global data center gigawatts live intelligence model. You know, we're trying to fuel the institutions, retail, and of course the industry with great information to make hopefully great investment decisions.
No, and I think you're doing a remarkable job of it, which is why I'm thrilled to get you on the tail end of a marathon of media appearances. So I appreciate you making the time, right? We're coming off the heels of NVIDIA's report where everyone wants to just poo-poo the AI trend. I said it today on Varney. I was like, dude, we've been doing this for 5 months saying, is AI a bubble? Is AI a bubble? Definitively not a bubble, but I want to bring this headline up because, you know, the Bank of America Fund Manager Survey is convinced that the semiconductor trade is too crowded. What do you make of that on the heels of NVIDIA's report where they just blew out earnings, revenue, every metric you could imagine?
Well, first of all, I think you and I were on that show together. I think you were sitting right next to Stu, listening to me talk, right?
I was stealing your talking points. Yeah.
Okay. Well, hopefully you used them well. I think it's all. So here's the thing. You know, I'm one of the biggest bulls on Wall Street. I'm one of the biggest bulls in the Valley. I genuinely believe, you know, our we'll talk about this later, right? 190 gigawatts plus or minus needs to be set up between now and 2030, and that's $43 billion a gigawatt worth of infrastructure.
Yeah.
Everybody hear that? $43 billion per gigawatt. Okay. So you do the math. It's in the trillions, folks. It's in the trillions. We have 2.7 trillion in infrastructure spend. Jensen says 3 to 4. Bottom line is this party isn't over yet, yo. Now,
do you think it's like getting late, or do you still think it's kind of mid party? I mean, what's?
Well, and I told CNBC, I said, we're in the parking lot right now. You know, we're cooking a few hot dogs and we're tailgating. The game hasn't even started yet. Now, having said that, some stocks have appreciated a lot into that. The markets are forward looking.
Right.
And you have to have a certain amount of respect for the fact that markets can be forward looking. They can give valuation before you've earned it. And then when you've earned it, they don't always give it to you in spades. Look at NVIDIA, right? NVIDIA is now a $5+ trillion company. That's a pretty good reward from the public market for an outstanding set of performances for multiple years back to back to back. Having said that, they printed 85% growth. They expanded their buybacks at $80 billion. They 25x their dividend. It's still small relative to a dividend name, but now they're actually putting off like Apple vibes in the sense of like strong, stable growth, innovator, worth trillions of dollars.
Yeah, that was my big takeaway. Like, you don't go from a penny to a quarter on a dividend because you think you might have good returns and profitability in the future. You know you're going to be be cooking with gas the whole
They're
time.
cooking with gas, and they know it. Here's their problem. They create so much cash flow, they don't even know what to do with it all. I mean, if you actually listen to Colette Kress, the CFO, their number one use of proceeds, unlike Apple, who uses it mostly for buybacks and for dividends, is actually to innovate, to continue to build yearly cycles of the absolute market-leading semiconductors, and to make sure that they're going to maintain leadership in an increasingly crowded space.
So you're not worried one bit about the semiconductor space, the rate of innovation and growth. I mean,
no, I'm not worried about the rate of growth or innovation, but I am the crowdedness. The reason Nvidia is actually one of the underinvested stocks in the big name stocks right now is because the trade crowded into speculative growth in the same category. So there are a number of names, but you look at like a Micron that's still trading at 6, 7, 8, depending on the day, times forward earnings, with almost a guarantee for at least the next 3 years, capacity can't be met. So that boom bust cycle that people worry about, and then depending on how quickly it gets built, and then like if you look at the inflections of AI, we've underestimated them at every stage. Like with generative AI, we didn't really see the inflection to agentic AI. We didn't see the CPU inflection. We didn't see the memory shortage. We didn't realize with agents, we're going to need more storage now. We're going to need to be able to move data faster, which means
that's the optical components,
we need
right?
optics. And of course, we still need copper.
Yeah.
And then we need to energize all this stuff. So with all this being true at one time, it's improbable that we're actually going to have any sort of supply-demand equilibrium anytime soon. But having said that, it doesn't mean the market doesn't forward run valuation. So the cautionary tale that I give is like, some of these advanced, optical companies, AAOIs, when I use, like they've seen their stocks go up like 20-fold.
Right.
And like a short period of time, it's like, it is possible that will pull back. Some of the names that you and I have been very supportive of, like in the GPU REIT trade and the NeoCloud trades.
Yeah. Like TeraWulf, Cypher,
Iron, we like Nebius a lot. It was one of our AI 15 top picks.
Yep.
Like these stocks have gone parabolic, and in some cases, but they still have untapped energy that's going to mean more contracts, more growth, more revenue. So, at the same time, a lot of these companies are going to need to raise more money. So you've got to kind of weigh all those things in to get to like absolute valuations in the future. But if you're talking about the trend is pervasive. And it will last for multiple years. If you're talking about market stability, I mean, look, wars, inflation, all those things that are elections, all those things that are taking place can impact short term. But over the long term, the companies that win in AI have a lot of growing left to do.
No, I love to hear it too. I mean, I pointed to the chart in a previous episode that we did about semiconductor space sector has been the best performing sector of the last decade. It's crushed everything, not anything anywhere close. I think the groundwork is set for that to continue. But like, I also want to make sure people know that are listening. You said in the beginning that you're an unabashed bull, my words, paraphrasing, but you do the work. You sit there in the rooms with some of the biggest players in this, arguably the biggest players, the Jensen Huangs, the Liputin, like, what they're thinking and what they're doing. So you cross that and overlay that with your own independent research that you're doing.
So we actually talk to customers too. We talk to the people implementing AI. And look, I went on CNBC closing bell, and I was the first up on a day that then they brought in like 15 bears to basically break my thesis apart, right? Of me being bullish that it's still early. And the one thing I'm convinced that anybody that is truly bearish on AI is not using it. They're not running a business. They're not implementing it into their workflows. Now, we can argue whether traditional SaaS companies will win the AI layer or if some net new disruptor will come in and win the layer. We can argue, will people consume compute from a hyperscaler, or will they go to a neo cloud, or will they bring the compute on-prem? But like the idea that tokens will not be consumed in great mass as AI continues to augment and accelerate and create, and nobody is accounting for the numerator growth. We all look at the denominator. Oh, CapEx is going to be 3% of GDP. Yes, if AI doesn't grow the economy by $20 trillion by the end of the decade, because we've actually built all this additional productivity, it might only be 1%. And then everyone's like, oh, that's not so crazy anymore. But nobody's actually factoring in the growth everybody's only factoring in the expense. And then everyone, just one last thought here, complains about free cash flow. And then there's a company like Nvidia that spits off $48 billion. Like, it's not that interesting of a buy. I would rather go into something more speculative. It's like people are not consistent in the way they evaluate this market. But when you talk to customers, you talk to implementers, you talk to the actual builders of the technology, and then you talk to the people who are putting real money, real investors into this technology, not pundits. There's no way you can be bearish on this.
No, I look, I agree. I mean, we're seeing it now. I think the news hit the wires earlier today about Microsoft banning all licenses for Claude now because they burned through their budget already, the API model, right? Like they lifted the limits, and now like you're seeing that there's just so many tokens being consumed because we're not hitting a ceiling on compute need, right? Like if you give me more to that I can do in compute, I'm going to take it. I'm going to take all that capacity, which brings us around to just understanding the nuance of how much we need to build out. You alluded to it earlier. You guys have a new report out, the $10 trillion ticket that's available for premium, paid. It's behind the paywall. But let's talk about it somewhere.
You got to see it though.
Yeah, no, I did. It's 100 pages. I couldn't read it all in one day. But I would tell you this: the chart that we've singled out, and you alluded to it, is the amount of data centers, the gigawatts of data center capacity we have to add in a bear case to a bull case. I mean, we're talking anywhere north of 215 gigawatts. I mean, that's massive. What does that mean for all the players in this space as you kind of dove into the research and said, hey, if we got to build mid case, base case, 190 gigawatts of additional data center power capacity, what does it mean for the 14, 15 players?
There's a couple highlights. It's 190 gigs plus or minus. It could be well north of 215. 70% of that's for inference. So, like when Anthropic went and took over part of Colossus, that's because they could use those older chips for inference use. But of course, the demand for inference because of agents is going parabolic.
Yep.
We have pegged $2.7 trillion worth of data center CapEx. Jensen's saying 3 to 4. And we've calculated that on a per gigawatt basis, that's almost $43 billion per gigawatt. And so people want to know, when do we hit $1 trillion in AI chips? By 2030, we expect almost $1 trillion in just the AI chip revenue, with $135 billion now going to DC compute, CPUs.
Right.
Remember when CPUs were a thing of the past?
I know.
CPUs, red hot now. ARM, AMD, Intel, and of course, Nvidia just yesterday mentioned they have a $20 billion line of sight to CPU business through their Vera product. We're going to have a constant demand constrained environment. It's going to last multiple years. We don't see any way that the DRAM wafer capacity can be met. It's probably going to take till 2030 again, and that's perfect execution on capacity additions. So it means structural shortages are going to last for years. And then there's another, for those of you that are investors in ASML, Applied Materials, other companies. We have a $224 billion semi-cap equipment, WFE budget by 2030. So, 2.4 million wafer starts a month, 380 billion of cumulative spending on that. So everything is bullish. And then of course we initiated coverage on 14 names through Futurum Equities.
Yeah, let's talk about some of those. I mean, which ones you initiate coverage on 14 names? Give me some of those from the investment insight angle.
Here's the ones that people are going to love, which are our biggest 12-month upside buys.
You're reading my mind. That's what I was going to ask you. Where's the biggest delta between current price and price target?
Unsurprising. Our top 5 is SK Hynix.
Yep.
For those of you not US, South Korea, AMD. I think we have the street high 750 on AMD. The 78% implied upside. TSMC we think is grossly undervalued. 61% upside on TSMC. Broadcom $700 target on Broadcom, and 66% upside there. And then Micron, we have another 47% upside at 1,000. We have Nvidia at 320. We do think there's significant upside there. But
I think the street high just came out today. Was it Baird maybe at 500? Yeah. What do you think of that? I mean, do you think it's eventually?
I don't think it's ridiculous. I mean, look, our team, I don't set these. Our Futurum Equities team does the work on these. They see some slowing in their growth modeling for Nvidia, But I think if you listen to Jensen and his expectation to continue to grow faster than CapEx, if he can execute on that, I think the sky's the limit. There's no reason they can't, because at 500, they're almost a $10 trillion business. I think they are about a $10 trillion business.
So we interviewed Beth Kindig from IO Fund before. I'm sure you've seen her on the airwaves crossing the past. She was on and said, she originally said $10 trillion market cap for Nvidia, and then maybe about 8 months ago revised that to 20 trillion. Do you think that's in the realm of possibility? Is that more like a Cathie Wood, like Tesla's going to a quadrillion and then now we're buying more? Like is she front running? I don't think Beth's that kind, but like where do you think we're going?
Super close, but what I've read from her has always been super topical, very realistic. And I know her performance, she shares her performance, which has been impressive. Her and Shai will have to go head to head to see whose portfolios are going stronger in their public.
That's fair.
But no, 20 is totally in play based on the revenue growth that they have, but I think it's going to take years to appreciate to that level.
Yeah, and she said that as much too. I think it's through the end of this decade.
If they execute and they're able to keep market share, I mean that's the biggest thing. Like we have AMD getting to about 10% of market share. Obviously Broadcom's growing, but the pie's getting so big that Nvidia can still grow a ton. And what we don't know is what we don't know. What they might build, how they might innovate, how they might lock, in through different capabilities. I'm very bullish on open source because of token costs. And I think NVIDIA's got an opportunity to really lead in that particular category. So it's not unlikely. 10 trillion feels very real to me. But again, it's also just staying power. Companies have shelf lives in terms of their continuous ability to run to these next valuations. Apple's been an anomaly with its ability to stay on top so long. We saw Intel. Of course, the Intel's rise is back, but it was a rise and it was a fall.
Yeah, that's a good point.
We gotta watch that closely. But overall, the opportunity for them to compete and continue to win is they've earned the right.
Yeah, one of the interesting stats that stood out to me is just their investments, 90 billion over the last 16 months in just venture type opportunities, right? It's trying to stay ahead of the next innovations, think about how you're going to lock in that future growth. So I think that's really smart.
They're becoming like Google. I mean, really quickly on that, like they have become incredibly savvy capital allocators.
Yep.
And it's worth noting this because a lot of people want to call it circular financing. When you make really sage investments into ecosystem companies that are going to benefit from the utilization of your technology, and then you invest at them at low prices, help them use the capital to drive appreciation into their businesses. If it happens to some share of that revenue comes back to you, who cares?
Yeah.
Google's done the same thing. And, if these dollars come in and these companies, the neoclouds they invest in, the optical companies they invest in, the, energy investments they make, if these investments help those companies grow and those investments grow meaningfully, I mean, they're getting billions of appreciation every quarter in those investments. That's good capital allocation.
No, I agree. It's a positive flywheel effect, right? It's just when it goes the opposite direction is when it's problematic.
Well, sometimes you lose. If they're investing in bad companies that don't grow with the capital that they've invested in them, that's just bad investing.
Yeah.
But
we haven't seen any signs of that. I haven't seen any sign of any of these companies not really. No,
but a lot of people keep calling. A lot of people keep calling it this round tripping and circular, and it's like it really only looks that way if the investments they make aren't appreciating.
Yeah, no, agreed. And we're seeing it play out with Microsoft, Alphabet. Those are paying off, no doubt. NVIDIA.
What did Alphabet make? Like 50 billion last quarter in the appreciation of their investments.
Yeah,
wouldn't be a bad
somewhere right around. Not a bad bet.
Those aren't Lou returns. But those are good returns.
I don't know, buddy. One of us flies in different class than me. So anyway, we won't go there. But
if you haven't noticed, we're all about all filling, zero fluff. And so is our email newsletter where we deliver insights, one headline that you should probably ignore, one chart you should absolutely pay attention to, and one investment idea that you should follow to increase your bottom line right alongside ours. So if you're not signed up yet, go to thebigskinny.com, sign up for our newsletter. If you can't be bothered to give up your email address, that's okay. Give us a follow on Twitter or on YouTube so you never miss another episode.
Before you run, I do want to pick your brain on some hot topics because we did talk about it at the top of the show. Peptides out today. Eli Lilly, Retatrutide, the latest phase 3 clinical results showing out at 104, 108 weeks, maybe 30% weight loss for those that were on the highest dose, which is the equivalent of bariatric surgery. I know you're a believer in peptides. Retatrutide is the GLP-3. I mean, it's a 3.0 next generation of the next generation. What do you make of all this?
First of all, everybody out there, go listen to the scientists that developed it. It's actually pronounced Retatrutide.
Retatrutide. All right, thank you.
Retatrutide. I learned that in a Instagram short. I'm not really that smart. I mean, GLPs and peptides are closely associated because it's a peptide that people understand. You know, I'm very bullish peptides. You know, I invested in a firm called Optimize Health and Performance, 50 state, you know, telehealth performance peptides. So I believe I'm invested in HIMS. Got in at the bottom, mostly under $25 and some under 15. So we'll see if I'm right or wrong. Still think HIMS could be the market analog for peptides. You know,
I agree. I've come around since we debated it. I absolutely see them settling. And yeah,
I like it a lot more that my average is sub 20 than I would have liked it if I was one of the people that bought it in the 70s. But the bottom line is, you know, I've microdosed with Retatrutide. You know, it is an incredible, you know, I had high cholesterol, I had high triglycerides. It got everything in order, but I took 1 milligram. So the dosages that they're talking about is 12. So I took 1/12 of the clinical dosage. And by the way, I found it hard to eat. The great thing is it's tremendous for muscle preservation. So the different receptors, GIP, GLP,
the glucagon, right?
Glucagon receptors. It doesn't bite. Like I think you maybe tried semaglutide. I tried it. I used to get like a stomach cramping. I tried it. Like and by the way, I never took high dosages because I didn't have like a lot of weight to lose. I just always, it was a vanity thing for me. I wanted to get cut. And it worked. But Reta is I think it's $1 trillion drug. I think
I do too. And I think this is why I own Eli Lilly. I mean, and I sampled semaglutide. I wanted to test HIMS's platform to see how easy it was, like frictionless to get a prescription. It happened. But then I couldn't even continue the semaglutide because it was just like, I was scaling up very slowly. And you said it. It's like your stomach cramps. You just don't want to eat. That's not a way for me, right? Like I wasn't in a situation where I needed it.
You like to eat. You know, you got a little Italian in you, right?
I got a lot of Italian. I'm an emotional eater. So let's be honest here. Like I'm in the yo-yo. I look like the VIX volatility index if you looked at my weight. It's up for 6 months, down for 6 months, up for 6 months, down.
Well, but I think peptides are the AI of human evolution. I think they will change the medical industry. I think we've got issues with the lines of biologics and how we make them available to people other than the ultra rich and elite. They can afford to pay whatever for them, but they've been, you know, it's life-saving, life-improving, and obviously not a medical doctor. Don't take my advice on this or really anything I've said in this show, but like, I think they're going to change the world, and I think Lilly's interesting. But I still, by the way, think Viking has the most interesting multi-receptor pill.
VKTX is the ticker on that.
I still think a Novo or someone should buy them. I really think.
So here we'll play a fun game towards the end here, which I call Fund Marry Kill. So FMK instead of F Marry Kill, but we use it with stocks instead of
Fund Marry Kill.
Yeah. So if you had to fund something for a trade, marry it and have it in your portfolio forever, or kill it and not have it, right? You go first, I'll do the same. Let's go Novo Nordisk, Eli Lilly, and Viking Therapeutics. Who do you fund? Who do you marry? Who do you kill?
I fund Viking, I marry Lilly, and I kill Novo.
Totally agree, because Novo has to buy Viking to even stay relevant. I think they're just out of the game now. They
just screwed up, man. They had it by, you know, they were like prime Intel.
Yeah. No, they
forgot to make an AI chip. Now Intel's getting a second life, and if they buy Viking, they can get a second life. Novo buying Viking would be like Trump buying Intel.
That's a great analogy. Yeah, I think you're absolutely right. It's a great
change your whole path forward.
Yeah, agreed. So I would still own Viking over Novo because I think Viking succeeds no matter what, even if Novo doesn't acquire them. All right, next round. This one's going to be tough for you because I know you have an affinity for all three of these. SOFI, HIMS, and Nvidia. Who do you fund? Who do you marry? Who do you kill?
Fund SOFI. I marry Nvidia and I kill HIMS.
Oh my goodness. Well, that's because you actually invest in your own peptide firm. So if peptide revolution takes off, you win.
It's also because the moat, while I like HIM's moat right now is revenue and scale, but it's not technology and it's not leadership.
Fair.
So I think someone could come up and I think the Amazon thing's overplayed. They've been fooling around with this idea forever, but someone that really wanted to get focused and build an amazing online distribution business for this, I think could be disruptive. SOFI is way undervalued now. It is such an interesting and exciting company. I mean, my average is $9. I own a yacht full of this stuff, but incredibly frustrating. But like all they do is, rule of 70, growth, performance, membership, diversification. Like I'm going to hold this for the next 20 years and I think I'll retire very happy.
Well, if you have a yacht full now, you're going to have a Jeff Bezos yacht purchase amount worth when this thing works out. So before I let you go, I got one last question.
What's yours on those? What was yours on those?
So that's tough because I don't know. So it was SOFI, HIMS, Nvidia. I'm going to do the same thing. I got to kill HIMS. I'm going to go though. I'm going to fund Nvidia because I think the upside's there, but I think you're dealing with a lot of law of large numbers. How do you get there? How do you maintain on top of the mountain? I think SoFi is undervalued. So I'll marry that one. I'll go for the long haul with you on that one because I do think that I've used some of their products. I've engaged with it. I do think they have a fundamentally really strong, solid business that looks at finance way different than typical banking and consumer-focused finance firms. So not much different than you. But I got asked last question, not a FMK, but just Mag 7. If you had to pick one Mag 7 name right now, we've already talked about Nvidia, so it's out. So let's do Mag 6, right? Alphabet, Amazon. You and I were very early on Alphabet. Everyone hated it this time last year. Do you still love that? Would you go with a Microsoft, an Apple? Dare you go into Tesla? I don't think so, but maybe you've had a change of heart. Maybe you're, I don't know. What do you think?
My two best ideas coming into the year were Meta and Amazon. And so they hadn't worked out early in the year. I still think people are writing off Meta right now the way they wrote off Google when you and I had sort of really picking it up. I just think Meta, talk about the attention is the moat. And 3 billion eyes. I just think there's a lot of ways to turn the revenue machine on. Taking a lot of risk right now, investing a lot, but I think it's existential. Don't write off Zuck too soon. I'm not a huge fan of him personally, but I just think that business is, I still think it remains a bit undervalued.
Yeah, Microsoft for me, because I think they're going to unlock the next wave of how to charge for licenses and be on the forefront.
I
of
like
AI
Microsoft
stuff.
a lot. I think it's oversold, and I've had to sit with Stuart a few different times and talk him off the ledge.
Well, but I agree with you, Meta. I'm not a huge fan of Zuckerberg, but you have 3 billion captive eyeballs. I think you're getting punished because he's incinerated so much capital with the metaverse. But if they figure it out and they can show that this CapEx into AI is delivering consistent quarter-over-quarter profitability, like I think that stock re-rates in a hurry. So we've covered a lot. I really appreciate the time, especially you've been a journeyman going through the media waves. Before I let you go, tell people how they can find you. What's the best place besides on X? Where do they find you at Futurum? What do you guys offer? The floor is yours to close us out.
Yeah, not a big sell guy, but definitely do connect up with me on X. I'm a lot of fun over there. Futurumgroup.com and futurumequities.com. If you're an institution, Futurum Equities, we believe the best market assessment and the best initiation of coverage across the semiconductor and infrastructure space. And we have live market models for data centers and chip companies. So check us out there. And of course, Lou, always appreciate the chance to get with the big skinny, the big fox guy.
All right, my friend. Look, I always appreciate your generosity. I need you to do one more generous thing in this lifetime. I need a hat. I need to don my dome with a Futurum Group or a Futurum Equities hat. So that's on my wish list. My birthday's November 10th in case you have some time and you want to get me a hat. But
in my spare time, it's coming your way.
All right. Hey, man, enjoy the rest of your evening. Always appreciate you, friend, and see you soon in New York.